Good day Forex trader. Your USD Forex signal, bearish move below 1.1500 in play. There is a likelihood that the pair will likely resume the downward trend as bears attempt to move below the support at 1.1500. Bearish view. Set a sell stop at 1.1528 and a take profit at 1.1400. Add a stop loss at 1.1600. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1600 and a take profit at 1.1700. Add a stop loss at 1.1500. The Euro USD struggled to find direction on Monday morning as investors reflected the latest Fed interest rate decision and the relatively strong American jobs data. The pair is trading at 1.1570, which is slightly above last Friday's low of 1.1513. US inflation data ahead. The Euro USD was relatively volatile last week as investors reflected on the Federal Reserve decision and the positive US jobs numbers. On Wednesday, the Federal Reserve decided to leave interest rates unchanged between 0% and 0.25%. The bank also made its first step to unwind its large easing program. It decided to start tapering its $120 billion per month decision. It did that by cutting its asset purchase program by about $15 billion per month. On Friday, the US published the best jobs numbers in 3 months. The economy added more than 500,000 jobs in October, which was better than the adjusted October additions of more than 312,000 jobs. The unemployment rate also declined to a pandemic-era low of 4.6%. Therefore, these numbers reinforce the fact that the American economy is doing relatively well and that the Fed will continue tightening. The next key mover for the Euro USD will be the latest American inflation numbers that will come out on Wednesday. The numbers are expected to show that the country's consumer inflation continued soaring in October. Precisely, analysts expect that the headline Consumer Price Index, CPI, rose to a multi-year high of 5.8%. Still, the Fed expects that inflation will start to moderate in the coming year. There will be no key economic data from the US and the EU today. Therefore, investors will keep focusing on last week's jobs numbers. Euro USD forecast. The Euro USD pair declined to a multi-month low of 1.1513 last week. By so doing, the pair managed to decline below the key support of 1.1528. This was an important support because the pair struggled to move below that level 2 times in October and November. The Euro USD pair is still below the 25-day and 50-day moving averages even after the strong rally that it formed on Friday. The Relative Strength Index, RSI, also moved to the neutral level of 48. Therefore, there is a likelihood that the pair will likely resume the downward trend as bears attempt to move below the support at 1.1500. GBP USD Forex signal, bearish sentiment still remains. The pair will likely resume the downward trend since it seems like it is forming an inverted cup and handle pattern. Bearish view. Set a sell stop at 1.3470 and a take profit at 1.3400. Add a stop loss at 1.3550. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3520 and a take profit at 1.3600. Add a stop loss at 1.3450. The GBP USD pair was little changed on Monday morning as the market reflected on the mixed interest rate decision by the Bank of England, BOE, hawkish Fed decision, and the strong US jobs data. The pair is trading at 1.3500, which is slightly above last week's low of 1.3427. Sterling pairs losses. The GBP/USD pair declined sharply last week after the BOE delivered a relatively surprising interest rate decision. Before the meeting, most analysts were expecting that the bank will either start hiking interest rates or start tapering its decision. As such, the market was relatively surprised when the bank decided to leave interest rates and QE unchanged. More surprising is that the number of policymakers who voted to maintain policy unchanged was relatively wide. Still, the bank hinted that higher interest rates were on the way. The pair's decline continued when the Federal Reserve decided to start tapering its asset purchases. It will continue slowing the purchases until mid-next year. It then pared back some of these losses after the strong U.S. jobs numbers. Looking ahead, the GBP/USD will react to the latest U.S. inflation numbers that are scheduled for Wednesday. The numbers are expected to show that the headline consumer inflation rose to a multi-year high of 5.8%. This will be the highest number since 2007. The core CPI is expected to have risen from 4% to 4.2%. The Fed expects that the country's inflation will start falling in the coming year. The GBP-USD pair will also react to the latest UK GDP data that will come out on Thursday. The data is expected to show that the economy expanded by 6.8% on a year-on-year basis. While this will be a strong number, it will also be lower than the previous 23.6%. GBP-USD forecast. The GBP-USD pair tilted higher on Friday as some investors attempted to buy the dip. Notably, this rebound happened when the pair dropped to a low of 1.3425, which was a few pips above October's low of 1.3410. Still, despite the jump, the pair remains significantly below last week's high of about 1.3800. It also remains below the 25-day and 50-day moving averages. Therefore, the pair will likely resume the downward trend since it seems like it is forming an inverted cup and handle pattern. The bearish trend will be confirmed when the pair moves below the key support at 1.3400. AUD-USD Forex signal, bearish breakout to 0.7300 possible. The pair will likely resume the bearish trend as bears target the next key support level at 0.7300. Bearish view. Sell the AUD-USD pair and set a take profit at 0.7300. Add a stop loss at 0.7500. Timeline, 2 days. Bullish view. Set a buy stop at 0.7435 and a take profit at 0.7550. Add a stop loss at 0.7350. The AUD-USD tilted upwards on Monday morning as investors reflected on the relatively strong jobs numbers from the United States and trade numbers from China. The pair is trading at 0.7400, which is above last week's low of 0.7358. U.S. jobs numbers and China trade. The U.S. published relatively strong economic numbers on Friday, signaling that the economy is doing well. According to the Bureau of Labor Statistics, BLS, the economy added more than 531,000 in October. This was better than the median estimate of 400,000. It was also better than the 332,000 that were created in September. In the same period, the country's unemployment rate declined from 4.8% in September to 4.6% in October. This was a better reading than what analysts were expecting. At the same time, wages rose by about 4.9% in October. These numbers were important because they came 2 days after the Federal Reserve delivered a relatively hawkish interest rate decision. The bank decided to leave interest rates unchanged between 0% and 0.25%. It also started to taper its asset purchases by about $15 billion. Therefore, the strong jobs numbers mean that the Fed will keep tightening its monetary policy. Meanwhile, China published relatively strong trade numbers on Sunday. The data showed that the country's exports increased by 27.1% in October even as the supply challenges continued. Its imports also increased from 17.6% to 20.6%. These numbers are important because of the close relationship that exists between China and Australia. The next key numbers that will move the AUD-USD pair this week will be the US consumer inflation data and Australian employment. Economists expect the data will show that the US Consumer Price Index rose from 5.4% in September to 5.8% in October. In Australia, the unemployment rate is expected to have increased to 4.7%. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair declined to a low of 0.7357 last week. This was the lowest level since October 14 and was also about 2.62% below the highest level this year. The pair pared back some of these losses on Friday after the strong American inflation data. It is slightly below the 25-day and 50-day moving averages and is slightly above the 38.2% Fibonacci retracement level. Therefore, the pair will likely resume the bearish trend as bears target the next key support level at 0.7300.